They stopped the planes. February 11th, 2026, 7:30 p.m. Eastern Time. The FAA puts a ground stop on all planes in Texas airspace. It's not because of bad weather or plane problems. The official statement just says special security reasons. And right in that same hour, silver stays at 84.16 while the dollar index keeps going up. You get what that means? Normally when the dollar gets stronger, silver should drop. That's how it's always worked for hundreds of years. But not tonight. Tonight, both went up together. And if you think that's just random luck or a computer glitch or Reuters messing up their numbers, then you haven't watched what happened in March 2020 or September 2008 or August 1971 or every other time they sounded the alarm and regular people found out last. This looks like a crime happening right now. The victim is fair pricing in the markets. The weapon is some people knowing way more than others. And the people behind it are probably already flying to safe places while they tell you to stay calm and keep your stocks. But we're not staying calm. We're collecting proof before they delete everything and pretend it was just a practice drill. I have the charts. I have the trade records. I have the exact times from the COMEX futures market. And I'm going to show you step by step what the big players did in those 4 hours between the FAA notice and when New York trading closed. They didn't freak out. They got ready. And you need to see what they saw. The people in suits want me to say this isn't financial advice. Of course it's not. It's like a guide to get through a fire in a crowded room. Do your own homework. If you still believe the people who made your money buy less over the last 55 years, since Nixon stopped the gold standard. This is just looking at the facts. This is reading the numbers. This is putting pieces together that Bloomberg won't touch because their biggest sponsors are the same banks short 290 million ounces of paper silver on COMEX, while real silver in warehouses is at a 12-year low. But we'll talk about that soon. First, we need the timeline, because in any investigation, the timeline matters most. 7:03 p.m. Eastern, FAA ground stop in Texas. Before we go on, hit that like button to fight the 2026 shadow ban that's hurting independent money channels since the algorithm changed last September. YouTube doesn't want you watching this. They want you on CNBC, where Jim says inflation is temporary and the economy is great and silver is just something crazy people like. But you're here, so you already know the real story. So like the video, push back against the hiding, help it show up so more people see what we're showing tonight. 7:03 p.m. The planes stop. Now here's some history because it helps. Every time there's a strange military or security thing that closes U.S. airspace, precious metals jump up within 6 to 18 hours. September 11th, 2001, gold was at 270 warns. 2 days later, it was $293. That's over 8% higher, even when everything was supposed to be frozen. October 2002, the DC sniper attacks. Silver went from 460 to 492 in 11 trading days. That's almost 7% up, while stocks fell hard and the dollar got stronger. See the pattern? When trouble starts, when planes stop flying, when the government says special security reasons and doesn't explain, the smart people don't wait for more news. They buy real things like silver and gold, things the government can't just print more of. They get the actual metal. And tonight, February 11th, 2026 at 7:03 Eastern, someone did exactly that. But this time, they got ready ahead of time. The trades show they knew before the FAA said anything. Let me show you. At 6:47 p.m. Eastern, 16 minutes before the ground stop news, there was a huge trade on the SLV ETF. 1.2 million shares. That's $83 million worth bought all at once. It happened in a dark pool, so no one saw the price move right then. Just a big institution opening a position right before airspace closes for security. Maybe it's nothing. Maybe some retirement fund guy in Connecticut just felt like putting $83 million into silver at 6:47 on a Wednesday. Or maybe someone got a tip. Maybe someone from the Treasury or Pentagon or one of the spy agencies called their buddies at a big bank and said, "Get ready because something big is coming that will shake things up." I can't prove the call happened, but I can show the trades, and the trades tell the truth. 6:47 big trade. 7:03 FAA notice. 7:22 silver futures jump from 83.90 to 84.30 in just 90 seconds. That's a 40-cent move on one candle in quiet after-hours trading where there aren't many buyers or sellers. Do you know how much money it takes to push silver up 40 cents that fast? At current levels, that's about 400 contracts bought all at once. Each contract is 5,000 ounces. That's 2 million ounces of paper silver grabbed in a minute and a half at $84 an ounce. That's $168 million in buying when New York and London are closed. This is money from Asia or Middle East governments or big funds. They know when Texas airspace closes for security reasons, you don't wait around asking why, you just buy. Now let's talk about how this really works, because it gets a bit detailed. Silver has two prices. One is the paper price you see on apps or CNBC or futures. Most of those contracts just settle in cash, not real metal. The other is the physical price. That's what you pay when you go buy actual silver bars or coins from a dealer. And right now, tonight, February 11th, 2026, those two prices are moving apart. Paper silver is 84/16. But if you check APMEX or SD Bullion or call your local coin shop, the extra fee for real American Silver Eagles is $9.50 over spot. That's an 11.3% premium. Normally, it's only about $3 over spot, so $9.50 is way higher, like 216% more premium than usual. When that gap grows, it's not just slow shipping or mint delays, it's people losing trust in the paper system. Regular buyers and small funds are saying, "I don't believe your paper ticket. I want the real silver in my hands." Think back to March 2020, COVID lockdowns hit. Silver spot dropped to $12, but real premiums shot to $8 over spot. You couldn't buy an Eagle for under $20, even though futures said $12. That gap lasted 6 weeks until COMEX made emergency rules to let different bars count for delivery because they were almost out. Same thing in 2008. Lehman failed in September. Silver spot hit $8.40 in October. But premiums went to $6 over, because no one had real metal to sell. Refineries couldn't make enough. Mints sold out. Dealers had months of waiting. Paper said silver was cheap. Real world said there was no silver at a fair price. That's a supply panic. Tonight we're seeing the start of that again, but this time it's not a bank crash or virus lockdown. It's a Texas ground stop for special security reasons that media isn't talking about much yet, and the smart money is acting like it's the start of something huge. So what do they know? What danger makes big money run to silver and gold at 7 p.m. on a Wednesday? I don't have secret government reports. I'm not getting calls from military command. But I can read the trades, and the trades are yelling that someone rich and connected thinks $84 silver is a bargain compared to whatever risk is coming. Drop a comment right now and tell me what premium your local dealer is charging today. Is it $9.50 over like APMEX? Higher? Lower? Tell me your city too. And if they're sold out of some silver items, say that. This is real-world info we collect together. Government won't tell the truth about silver supply. Banks won't admit they're short. But dealer prices don't lie. The street price is the true price. So comment your info. We need it to see what's really happening while paper markets act normal. From a strategy view, here's what comes next. We have about 9 hours until Asian markets open. Shanghai, Hong Kong, Singapore. They don't like surprises. When the US has a security thing with planes stopped and vague government words, Asian money usually does the same thing. They buy gold, they buy silver, they sell dollar stuff and get hard things. Why? Because the last 4 big US security problems led to huge Fed money printing. September 11th, Fed opened unlimited lines and cut rates to 1%. COVID, Fed printed $4 trillion in months. Every crisis gets the same fix. Print money, save banks, hurt the currency. If you're in Shanghai seeing Texas planes grounded, you don't wait to see if it's bad. You assume it's bad and get ready. Here's the numbers. Shanghai Gold Exchange normally trades about 300 tons of real gold a day. Actual metal delivered, not paper. If this event makes them buy 10% more, that's extra 30 tons of demand when the West is quiet. At current prices, that's about $2.1 billion more buying. Now think silver. Shanghai silver futures trade about 33 tons a day. 10% more fear buying is extra 3.3 tons at $84. That's $9 million. Doesn't sound huge, but in thin overnight trading, $9 million can push the price up 3 to 5%. We're talking $84 to $87 or $88 by London Open. And here's the fun part with banks. Big banks like JP Morgan, Citigroup, HSBC are short a lot of silver on COMEX. Latest report, February 4th, showed 291 million ounces short from commercials. Naked shorts. They don't have the metal. COMEX registered silver is only 72 million ounces. Do the math. 291 short versus 72 available. That's over 4 times more shorts than metal. If even 15% want real delivery, the whole thing crashes. We saw it March 2020. We saw it May 2021 when Reddit pushed silver to $30 and COMEX changed margins 3 times fast to stop it. But tonight is different. Buying isn't from Reddit people. It's big funds and governments with real money who can demand delivery. If they think Texas airspace closing means big trouble coming, if they think paper silver from over-leveraged banks is riskier than paying 11% extra for real metal, we could see forced delivery. COMEX either finds 200 million ounces that isn't there or says force majeure and pays cash at whatever price they pick. If they break delivery promises, paper market loses trust. Shanghai price becomes the real one. Premiums jump from 11% to 30% fast. Your local dealer stops selling because they don't know the value anymore. Look at 2024 for proof. July 2024. London said 6 Swiss refineries stopped for energy issues. Not huge news. Refineries pause sometimes. But it caused 3 days of panic. Asian physical gold premiums went from 50 cents over to $14 over. LBMA said no shortage. Bank of England quietly lent gold to calm it. 2 weeks later, normal again. But for 3 days, if you wanted real gold in Shanghai, you paid $14 extra. 400% premium jump from a refinery note. Now think what happens when planes are grounded for security and government gives no reason. Connect it to the big picture because nothing stands alone. It's February 2026. U.S. debt to GDP is 134%. Last month, Budget Office said interest payments beat defense spending by 2027. Treasury rolls over $8 trillion debt this year. Fed still tightens. Deficit $2 trillion a year. Not okay. It's a debt trap. Only way out is inflation. Print money, weaken dollar. Default by making money worth less. That's the plan every big empire uses when debt beats income. Smart money knows. They buy silver not for company profits. They buy because dollar will buy less. And Texas airspace closing for no clear reason speeds up that worry. Makes hedging now instead of later. Fed doesn't advertise this. Their emergency lending is already running in 2026. Bank Term Funding Program was supposed to end 2024 but got extended to 2025, then quietly to 2026. It has $93 billion out now. Banks borrowing from Fed at full price for bonds worth less. Hidden bailout. Fed taking bank losses quietly. Stress never left from 2023. Losses on long bonds still there. Fed just covers them instead of letting banks fail. So when markets act strange, silver holds $84 while dollar rises. Big trades happen before FAA news. You wonder, is this tied to bank problems? To treasury mess? To government spending $2 trillion extra while rates at 5.3% and biggest rollover ever? Those things make the system weak. One surprise like plane grounding can start a chain reaction. Look at repo market. Overnight repo rate 5.4%. Higher than Fed funds. Means not enough good collateral. Banks need treasuries for funding. If treasury prices fall from higher rates and banks have losses, they need more collateral for same loans. That squeezes things. When collateral squeezes, weird stuff happens in derivatives. Swaps get expensive, trades break, and metals with no risk start costing more than paper versions. Tonight, physical silver $9.50 over spot. Gold Eagles $30 over, platinum $93 over, crisis premiums. You see them when system stressed and people want real stuff, not paper. Public trigger is Texas ground stop, but real trigger is debt trap, bank stress, Fed emergency programs, rollover mess, repo squeeze. All already there. Ground stop just let big money move on what they knew. If you like this kind of straight talk, if you like me showing connections mainstream ignores, hit super thanks below. YouTube demonetized half my stuff for financial misinformation. Showing COMEX numbers and Fed data is misinformation now, apparently. So if you want real research not paid by Wall Street, super thanks keeps it going. Every bit helps. Every view fights the algorithm. Let's add the world politics side because Texas doesn't happen alone. We're in a money war. Dollar versus BRICS, new system. 2024 Saudi ended 50-year petrodollar deal. Now take yuan for oil. Russia-China trade in rubles, yuan, no SWIFT. India pays rupees for Russian oil. Brazil, Argentina look at common money for trade. De-dollarization speeds up. Every U.S. security event that needs Fed printing shows dollar as political weapon, not safe money. So when Asia opens tonight, sees FAA news, sees silver hold $84 despite strong dollar, they won't think small problem. They'll think dollar weak. They'll buy more gold for reserves, sell treasuries, speed up commodity trade deals. That makes loop. Dollar weaker, commodities stronger, more dollar selling, more commodity buying. That's how reserve money ends. Slow bleed of trust until one day yuan gold sets price and COMEX old news. China part matters a lot. China biggest silver user. About 6,000 tons a year for solar, electronics, factories. 2025 their mines peaked and started dropping. Demand up from green energy. So big shortage. China imports silver now, but they don't trust COMEX. Seen the games, seen too much paper shorts, seen price kept low. So they buy real silver on Shanghai and take it. That pulls from West, tightens real supply. When US has security scare and dollar system looks shaky, China buys physical faster. They want to be ready before paper breaks. Inventory numbers, COMEX registered 72 million ounces. Shanghai silver inventory, 143 million ounces. China has double COMEX, even with smaller futures. Why? They're stacking real while West plays paper. If tonight event makes China buy 10% more, 14 million ounces gone from supply in a week. COMEX can't handle. London can't. Only way is higher prices or no delivery. And no delivery kills paper trust. Real price in Shanghai. Premiums explode. Dealers stop selling. Now the hidden derivative part. BIS reports every 6 months. December 2025 showed 119 trillion in precious metals derivatives. Not typo. Global silver mined yearly about 25,000 tons worth 73 billion at current prices. So 119 trillion derivatives on 73 billion real metal. 1,600 to 1 leverage. That's how banks keep prices down. Make endless paper shorts, trade between themselves to set price. Works if no one wants real delivery. But when security scare hits, fear starts. Big funds want metal, not paper. Leverage flips. Small real buying causes huge unwinds. Short banks buy futures to cover or deliver metal they don't have. Buying pushes price up. More margin calls. More buying. Higher prices. Short squeeze. Like nickel March 2022, London halted trading. Price from 30K to 100K ton in days. Shorts couldn't cover. Trades canceled. That was nickel. Imagine silver where shorts 4 times inventory. Imagine banks forced to deliver nothing. 1980, Hunt Brothers tried corner, got 200 million ounces physical and futures. Price $6 to $50 in year. COMEX changed rules. Position limits, higher margins, liquidation only. Hunt's forced sell. Silver crashed to $10. Exchange saved shorts by rule changes. Same will happen 2026 if real squeeze. COMEX won't let banks fail. Change margins. Halt trading. Force cash. Protect big players over fair price. Not guess. Pattern from 50 years, but 1980 different from 2026. Then shorts had government and private silver to deliver. Today, government stockpile 0, sold last in 2005. No backup silver, no Hunt position to force sell. Buyers now central banks, sovereign funds, regular people with real metal stored, can't force them sell. Can't call China and say sell reserves to save COMEX? Next crisis different. Either real high prices or force majeure and paper market dies. No middle way. We're 4 hours from Asia open. Subscribe now because we'll watch hour by hour. If Texas news gets bigger, if more info why closed, if weird trades overnight, I'll update tomorrow morning. But subscribe to see it. Algorithm buries this. They want mainstream saying all fine. Hit subscribe, turn notifications. Be ready before they add more controls. Also follow backup channel and featured section. 2 channels to beat censorship. If one gets hit, other keeps going. Subscribe both. That's protection. Now what to do with this? Not telling you buy, not your advisor, don't know you. But smart money from trades is buying real metal. Less paper claims, moving from long bonds to short ones and hard stuff. Getting ready if dollar loses value and real things gain. Not saying tomorrow, hedging chance it could. When huge funds hedge, that's signal. If you have paper like SLV shares or futures options, you have claim not metal. Claim only good if other side delivers. SLV with HSBC. If HSBC trouble, run on trust, redemption breaks, shares could drop 20% fast while real metal jumps. Paper risk. Betting system works in crisis. History says bad bet. If you want metals, no real metal in hand versus bank promise. One you control. Other promise may be broken when needed. Basel III rules full since January 2025. Physical gold Tier 1 asset. Banks hold as safe capital, no penalty. Paper gold derivatives Tier 3 high penalty. Big reason for banks shift to physical. Central banks bought record gold 2024-2025. IMF says 2,300 tons added 2024. Real metal gone forever. Silver follows gold slower. When strong hands take gold, silver pulled too. Same money worries. Tonight, maybe Basel III hitting silver. If banks need physical for rules, cut paper, raise physical, premium keeps growing. Premium is crack. Proof derivative losing trust. Physical only thing real. Worst case for shorts. Say Texas event serious. More news next days says not drill. Market thinks real crisis. Asia buys overnight silver to 87. Europe opens sees it adds push to 89. New York opens delivery demands rise. Banks short 290 million sea trouble. Try cover buy futures. Price to 92. 97. 97 breaks chart algo buying. Momentum funds jump. Retail FOMO. 105. Smaller shorts margin called forced buy. 105 to 115. Somewhere COMEX force majeure. Cash settle whatever price. Paper dies. Shanghai sets price. Dealer no quotes. Not saying happens. Saying risk smart money hedges tonight. Why 83 million SLV at 647 before news. Why silver no drop on strong dollar. Why 11% premium. They see cascade chance. Position early, wait and no metal. Dealers out. Premiums 30%, weeks wait. Pay crisis price or nothing. Institutions buy now at 84 with 11% premium. Still metal, still delivery. One more history, then finish. August 2011 U.S. credit downgrade AOA to AA+. Friday night, Monday gold $1,700 to $1,800, silver $39 to $43. Fear fast, but didn't stop. Gold to 1920, 3 weeks, silver 49, 27% gold, 25% silver from start. Why kept going? Downgrade proved debt bad. Politics broken, Fed print, metals only hedge. News Friday, but move weeks because basics supported. Tonight maybe same start. FAA ground stop trigger, but basics already there? Debt trap, bank stress, Fed programs, repo squeeze, BRICS shift, COMEX low stock, China buying, derivatives huge, Basel change. Ground stop lets market react. If Asia starts tonight, 87 London open, momentum builds, could run weeks like 2011. Not just Texas, macro says higher prices. Market wants excuse. Final thought tonight, stay safe, stay ready. This not normal. Silver and dollar both up. Big trades before FAA, physical 11% premium while paper fine, that's inside info. Smart money acting on stuff retail doesn't know. Your job not guess exact. Position for chance they're right. If wrong, silverback 78 next week, you paid 11% premium for metal hold years. If right, cascade starts, paper breaks 150 with 30% premiums. Tonight, last good price. That's the edge. Why institutions buy. Downside 11% premium, upside before break. Trade they take always, question you take it, I'll watch all night. If Texas big news, overnight weird, Shanghai gap up, cover tomorrow. Subscribe notifications. Be in group. When real move, no catch up time. Either know from data or watch CNBC wonder why 84 to 107 3 days. Don't be CNBC person. Be one who saw from trades, stock, derivatives, world stuff, difference win-lose, info and position, rest noise. If this helped see under surface tonight, super thanks, like, comment your dealer premium crowdsource, real data. Subscribe both channels, get ready tomorrow. Uncharted now. Correlations broken. Smart money ready for something media ignores. This archive, independent money info, just starting.